Ladies and gentlemen, good day and welcome to the Q3 FY22 post-results conference call of Titagarh Wagons Limited, hosted by ICICI Securities. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Rishad Kapadia from ICICI Securities. Thank you, and over to you, sir.
Thank you, Rituja. Good afternoon, ladies and gentlemen, and welcome to the Titagarh Wagons Limited Q3 FY22 results conference call. We have with us from the management, Mr. Umesh Chaudhary, Vice Chairman and Managing Director, Mr. Anil Agarwal, Director Finance, and Mr. Saurabh Singhania, Group Financial Officer. So without further delay, I would now like to hand over the floor to the management. Thank you, and over to you, sirs.
Thank you very much, Rishad. Very good afternoon, everybody. My name is Umesh Chaudhary. I already started with the opening remarks on Friday when there was a problem with the network. I would probably just give a very, very quick overview of the performance of the Q3 for the company, and thereafter open up the floor for any questions. So Q3 FY22 was an interesting quarter for us. On standalone basis, this is the highest ever revenue that the company has clocked in the history of its existence. In terms of the three business segments, I will just give a very quick data points of the highlights of the three business segments that we have. And the freight wagons, we continue to do as per expectation. The new requirement for freight wagons is likely to be very healthy because the railways have set for themselves a very ambitious or a very visionary freight loading target. If this target has to be achieved, then the wagon requirement or the wagon procurement target have to be enhanced substantially going forward. And the company is in a very good position to be able to cater to that demand. In terms of the transit and the propulsion business or the passenger mobility business, the company's first train has been successfully commissioned, which in Pune Metro, which was supplied from our plant in Italy. The second train also has left, and the third train from Italy would be dispatched within this month. And the first train that is being produced in India is in an advanced stage of production. And we are expecting that in this quarter, we will start the supplies of the trains manufactured. That is in Q4, the trains produced in our facilities in Calcutta would start getting supplied to the Pune Metro. In addition to that, the company has participated in some other metro tenders and also in propulsion tenders, where the propulsion tenders company is well placed and is expecting additional orders. So we are also expecting to start the supplies of the traction motors and the traction converters from our facilities in either this quarter or the first quarter of FY23, which is going to be a very important milestone for the company because it would move the company into a high technology area of propulsion electronics. In terms of the third business segment, that is the SBD, which is shipbuilding, bridges and defense. The company acquired the facility, asset and infrastructure of Precision Shipyard from a particular bank. And this is very strategic for the company because it gives us access to infrastructure on the south side of the Havra Bridge, which complemented with our existing facility will enhance our shipbuilding capabilities much further. So this is in a nutshell as far as the company's performance in India is concerned, the Indian operations. The overseas operations and the Italian operations, there are 2 or 3 important data points which I'd like to share before I close my opening comments. The first one is that the legacy contracts that the company has been facing are coming to an end. We expect that within the Q4 of this year, maybe a little bit of spillover to Q1 of next year, we will complete all the legacy contracts or the onerous contracts that we have in the Italian subsidiary. The company signed a very interesting contract for the Rome region, Lazio region, for about 300 million euros for trains that will be manufactured in our company, designed and manufactured by us. This takes up the order book of the Italian subsidiary, including the framework contracts that we have, to about 500 million euros. And 500 million euros would be of the new orders, that is not of the legacy contracts, not of the onerous contracts, and therefore the visibility going forward for the Italian subsidiary looks good. These are in effect the opening comments, and I'm happy to take any questions that you see there. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sriram Ramdas from Green Portfolio. Please go ahead.
Hi, sir. Good afternoon. First question is
Good afternoon.
On the margins in the shipbuilding segment. This time it has been quite unusual. It's at, I think, around 50%. So what's the reason behind this? I'm sure it's not sustainable, but how much do you see the margins going forward, considering the fact that we have acquired another shipyard?
Sure. So on a blended basis, our margins in India, as we have always maintained, that EBITDA margin of around 8 to 10% is what we are expecting, and that is across the business segments, the 3 business segments on a blended basis. The margin variations can happen on a contract to contract, on a quarter to quarter basis in our business, and this is primarily because of some spare sales that we booked during the quarter, where the margins can be higher than the normal construction margin. But in terms of the margin guidance, again, as I said, on a few contracts, maybe we can get a couple of percentages higher or a couple of percentages lower. But on a blended basis, 8 to 10% EBITDA is what is strategically what we look at when we are pricing our products.
Okay, thank you. And secondly, nearly 35% of the dedicated freight corridor DFC has been operational. And has the railways released any new tenders? In the opening comments, you did mention. And if possible, are we L1 bidder for any of these tenders?
Sure. So there are a number of requirements that are coming up, not only for the dedicated freight corridor, but also the government has announced that they would be looking at doubling their freight loading in the next few years. That would essentially mean much more number of wagons that they will have to procure or acquire. And I have always maintained that the railways have spent a lot of money on capacity creation, in terms of investing in signaling infrastructure, track laying, etc. And now they will have to invest in capacity utilization, which means more and more rolling stock. So there will be a demand which will come up. There has been we have been expecting this demand to come up over the last few years, but the railways have focused more on the infrastructure development in the last years. But what we hear from the meetings that we've had recently with the railways and from the announcements that we have seen, that there is a impetus being given on growing the revenue or the freight loading target, and that means that there will be an enhanced demand for wagons. In terms of our being L1, these are regular tenders that keep on going on, so we would not like to mention anything on our inter-se position right now for competitive reasons until and unless the tenders are finalized.
Okay, makes sense. Thank you. And so last question is on the propulsion system with the ABB that we're doing. So until when, can we expect us to get into regular production? I mean, I know we're going for a couple of tenders now, but when do you think that we can get into regular production? We have a good setup manufacturing base to get into regular production. Any timeline on this?
Yeah, I mentioned that in my opening comments. It will be in Q4 of 22 or Q1 of 23 that the regular production would start. So the facility creation has almost been completed. We have almost all the facilities already installed. They are under commissioning and testing. So we are expecting that in the current quarter or the next quarter, we will start the production for both the traction motors as well as the propulsion systems.
Okay, thank you very much, sir. Great results. And as always, you have followed up with the previous guidance and all the ventures that you did, it has come in line. Great job. Thank you.
Thank you very much.
Other questions, I'll come back in line. Thank you.
Thank you. The next question is from the line of Sanjay Avdarami from Envision Capital. Please go ahead.
Yeah, good afternoon, and thank you for giving me this opportunity. Sir, what is the total order book currently we have, and what is the revenue guidance for FY23? If you can highlight some things on that.
Sure. So as far as the order book is concerned, our Indian operations have an order book of about 2,500 crores. And the consolidated order book that we have between the Indian and the Italian subsidiary of 7,000 crores. In terms of revenue guidance, we have never given forward-looking numbers. So we would refrain from giving any revenue guidance for the FY23. But what I would like to say is that we have three clear, distinct verticals that we have, and that's how we've structured the management of the company, the operations of the company. Everything is based on that, and that's how we've also now started the segmental reporting so that the investors can have a clear vision as to how the companies and all the three business verticals of the company is doing. We believe that the freight vertical should continue to do in the same pace and the same manner that we have been doing. The real growth should come in from the transit and propulsion as well as shipbuilding, bridges and defense. As far as the transit and propulsion is concerned, we will see the revenues coming in FY23. In the shipbuilding, bridges and defense, it will although be smaller in FY23, but we believe that in the next 2 or 3 years, the revenues will slightly increase. So all the three business verticals are going to be giving us to their full potential in the next 2 to 3 years. And that's how we are targeting internally. So if I could just give you a data point here again, which is going to be relevant to understand how the company has been moving. So if we put the company into 3 years perspective, in the years 17, 18, and 19, the company did an average revenue of about 350 crores, 350 crores, Indian operation. 20, 21, 22, the average revenue has been about 1,000 crores. And if you look at the 3-year horizon thereafter, we are expecting that we should be able to get to the next level because of all the three business segments coming in. So I hope that answers your question.
Oh, yes, sir. This was clear, and I just wanted to confirm that Indian order book, you mentioned that it is currently 2,500 crores, and Italy and Indian combined is 7,000 crores. Is this correct?
That's right, including the framework contracts that we have in Italy.
Okay, sir. This is all from my end. Thank you. Thank you so much, and good luck, sir.
Thank you.
Thank you. Reminder to the participants, to ask a question, please press star and 1. The next question is from the line of Vasudev from Edelweiss. Please go ahead.
Yes, thank you for the opportunity, sir, and congratulations on a great set of numbers. So, sir, on the order book front, just wanted to clear that this 7,000 crore, does that include the 280 million euro order that we got in January?
Yes, it does. it does that.
Okay, okay. And so, sir, what would be the split of order book, as in the split, as in what would be the wagon order book is specifically what I'm concerned of the total order book?
So we've given in the investor presentation that has been uploaded on our website also the breakup on business-wise order book for the Indian operation. I would like to mention that the ordering for FY22-23 is yet to be finalized. So the order book for the wagon is going to undergo a change once the tenders are finalized maybe in the next couple of months.
Okay, okay. And would it be possible to give the split of the wagon order book between public and the private sector?
We have already given the disclosure to the maximum extent possible without compromising on competitive landscape. So that has been given in the investor presentation which has been shared with all of you.
Okay, okay, got it. And sir, could you give us the debt figures in the India business and the Italy business?
Sure. In India, we are on the long-term basis, we are net debt-free. On short-term, we continue to use the working capital facility as and when required. So there are quarters that we end up using the working capital in India. But on a net long-term debt basis, India is now debt-free. In Italy, we have a total debt of about 80 million euros.
Okay, so
85 million euros, approximately.
Okay, okay, got it. 85 million, okay. And sir, if you can give me how many wagons were dispatched in the third quarter and YTD in FY22?
Sure. I'm joining in the call from Europe, so I will request my colleague, Mr. Anil Agarwal, to give this number.
Yeah, so roughly around 3,000 wagons we have supplied in the 9 months, and in this quarter it was around 850 wagons.
850 wagons. Okay, great, sir. And sir, now that DFC wagon ordering is started, so how do we like to approach that? What are our views for the DFC wagon ordering?
Our views remain constant. We believe that not only for the DFC but for the regular route also. So we don't see DFC as a separate entity altogether. What we see is that it is enhancement of the overall capacity of the railways, and that's what I mentioned earlier, that the railways has spent a lot on capacity creation, and now they will have to utilize that capacity in order to service the investment that has been made. And for that, the natural corollary is going to be that they will require more capacity. So we are now waiting for the railways to come to that stage where they are able to achieve the freight targets that they have set for themselves by acquiring more wagons.
Okay. And sir, on the pharma performance, could you share that about, it has turned EBITDA positive, and how is it likely to go ahead?
So as far as the Italian operation is concerned, I just mentioned that we are concentrating on executing the legacy contracts. So we are fairly confident that Q4 of the current financial year and maximum Q1 of the next financial year, we will close all the old contracts, which are the onerous ones, which are the loss-making ones. Thereafter, we are going to be operating or executing only the new contracts which are profitable. So we believe that Q4 and Q1 of next year are going to be still challenging as far as the Italian operations are concerned. Thereafter, the situation should be much better in Titagarh Wagons.
Oh, that's great, sir. And sir, do we have any?
I may like to add here on the Italian operation. The important data point is that in the last 2 years, we have in Italy developed 2 new trains, right from the concept stage, that is the design stage, up to the prototype manufacture, and clearance of all the tests. One is for the Sicily Metro and one is for the Pune Metro, which in itself is a very big achievement and kind of speaks volumes about the technology and the technical expertise and capabilities that Italy, the Italian operation has.
Great, sir. Great. And sir, do we have any bid pipeline?
Sure, absolutely. We have several tenders that we have participated in, more in India than from Italy. But, we would like to speak about them only once they materialize.
Okay. And so final question from my side, what is the capex that we've done in this quarter and what are our the targets for FY22 as a whole?
In terms of the capex that we have done, the numbers are there in the results, and maybe my colleague Anil Agarwal can complement and give you the numbers. But we have spent a lot of money in terms of all the infrastructure creation for the metro and the propulsion, and also upgraded our existing facility in the wagon. This has been entirely done by way of internal approvals. Going forward, we are looking at enhancing our capability on the metro side as well as on the shipbuilding side. So we will come back to you once we have finalized the numbers and the same have been approved by the board.
Okay, sir.
Thank you. The next question is from the line of Ashna Manaktala from ICICI Securities. Please go ahead.
Hello. Hi, sir. Sir, my first question is in continuance with the previous question where you mentioned that you're planning for capex in certain capabilities around railway and shipbuilding. So if you can give some highlight on what are these capabilities that going forward you're planning to build on?
You're talking specifically for the shipbuilding?
Sir, for both of them, for shipbuilding and even for the your railway business.
So right now, what the facility that we have set up in for the metro coaches and for the passenger coaches is for aluminium coaches, and in fact, the company is the first Indian company or the first company to have supplied aluminium coaches to any metro system in India, which is in itself a very important achievement. But going forward, we are also contemplating setting up facilities for other types of metro coaches and coaches, which is including stainless steel, enhancing our capacity, as well as going deeper into the electrical and propulsion business. So all of this will require some capex. The exact quantum, once it is firmed up and approved, we will definitely come back and announce that in the market. In terms of the shipbuilding, we would continue our strategies to continue to be in the specialized shipbuilding segment. We are not looking at getting into the commodity shipbuilding segment. So we are looking at the naval and the research vessels, the naval vessels, and so on and so forth. So both the facilities, that is the new shipyard that we have acquired, will have to be upgraded substantially, and as well as the existing facility that we have in Titagarh. Both will be complemented with each other to make an integrated shipyard facility, catering primarily to the naval and to the research vessels and specialized vessels in the market.
Okay. So for the precision shipyard that you just acquired, as you mentioned, you'll be needing additional capex for that. So so should I assume that from that shipyard, incremental revenue will take some time, or how is that going to pan out?
As I mentioned, that we are already producing ships in our existing shipyard. This is to enhance the capabilities, because there were certain constraints that we had on account of water draft and air draft in the existing shipyard. We have an order book of about 400 crores in the shipbuilding, and this will enable us to participate in many more tenders that we were not able to participate in the past due to this constraint.
Okay. And
so the revenue,
as you mentioned,
revenue will be there, but the enhanced revenues will come in only in a couple of years once both the shipyards are fully operational.
Okay, got it. And sir, in terms of the like the recent incremental railway capex that was announced, what would be the tentative opportunity size for especially the wagons and for the metro business for you?
So the metro does not fall under the railways. That would be under the Ministry of Housing and Urban Affairs. But I saw that the Honorable Minister made a comment or a statement in the Parliament that there are 16 new metro projects that have been requested by different states. So there is obviously a very large pipeline for metro projects that will be there. In terms of the opportunity in the railway budget, obviously there is a large target that has been set up for the freight loading and ambitious one. So that would culminate into very large wagon tenders that should be issued. But once we will only know the quantum once it's really been issued. So we should wait for maybe a few weeks, a couple of months to see how the procurement cycle pans out. But we are extremely optimistic about it.
Okay, sir. And sir, in terms of the propulsion systems with ABB, so like you mentioned that it would take another 1 or 2 quarters for it, to get it into full production. So what could be the incremental revenue from that business we could see in the coming couple of years? And are there any incremental capex that would be required for that once it goes into full production?
So in terms of the incremental revenues, the revenue till now for the propulsion was 0. So the entire revenue, the order book that we have now is a very small one. It's about 100 odd crores, but the market size is almost 3,000-4,000 crores. So we expect that there will be an opportunity for the company to tap into that market size. For the capex, we have already spent the amounts in the last maybe 6 quarters to set up this facility. Now the capex required for the propulsion would be when we want to enhance the production capacity, and that is then going to be an ongoing exercise. It's not going to be something which is going to be an exceptional one-off capex. Bulk of it, I would say 60% of the capex that was required in the propulsion, maybe even more, has already been spent or invested.
Okay. And sir, if I may, who are your competitors in this propulsion system business? Like, who are the other players who have a capability in this space?
There is Alstom, there's Bombardier, there is to an extent BHEL, there are Siemens. So there are a number of companies which are there, but they're a different bunch of companies, not the same as the ones in wagons.
Okay, got it, sir. And one final question from my side. What is the size of the legacy contracts that are there that you mentioned in the Italian operations? If you can give that number.
I'm sorry, I missed your question. There's a beep in between.
Yeah. So for the Italian operations, you mentioned you have the legacy contracts, right? What would be the size of those contracts that is still pending? And the new contracts that you mentioned, they are, as you mentioned, were on higher margin. So are they fixed price or are they variable price contracts? These are my last questions.
So as far as the Italian contracts are concerned, they are mostly on a fixed price contract. But we also have a back-to-back finalization of contracts for important materials on a fixed price basis. So we try and make sure that the price variations, the risk of that is mitigated to maximum possible extent. As far as the overall legacy contract is concerned, out of the order book, I would say just about 5% of the contract, 5 to 7% of the overall order book would be now legacy contract, and 93 to 95% would be the new contract.
Okay, got it. Thank you so much, sir. I'll come back with you.
Thank you. The next question is from the line of Nitish from Equitas. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, I would like to understand with the increase in aluminum prices, will that affect our margins?
So as I just mentioned, that when the contracts we finalize, we kind of try and make sure that we tie up on a back-to-back basis.
Okay.
In Europe. In India, most of the contracts come with a price variation. So, to an extent, we are naturally hedged by way of the price variation clause.
Okay. And so you briefly touched upon the point that...
I also must mention that I had mentioned it in the earlier calls that there are always possibilities of some quarter-to-quarter variations in terms of the movement of the wholesale price index to the actual price increase. So the margins can get impacted also in the Indian orders by maybe a couple of quarters, 3 quarters. But on the whole life cycle basis, we are able to recover the cost increases to a substantial extent.
Okay. And so you briefly mentioned that we are also planning to enter into the stainless steel coaches market. So first, I would like to understand what would be the price difference between an aluminum coach and a stainless steel coach?
So, that would be going into a little bit of more technical details, and probably, we can, my team would be happy to discuss that offline. But effectively, the client preferences are what will decide the offering of the product. There are certain clients that are preferring stainless steel. There are certain clients which are preferring lightweight aluminum coaches. So we want to increase our bouquet of offering, and that's how we want to be present in all segments, and whatever the client prefers, we should be able to offer that.
Okay. And sir, for manufacturing stainless steel coaches, will we require new tie-ups or manufacturing facility? What kind of capex will that require? Any color on that?
Definitely additional capex will be required, additional investment will be required, and that's what I mentioned a few minutes ago, that we will, once it's finalized and approved by the board, we will come back to the market. But in terms of capabilities between our Indian and Italian facility, we have the technology and the expertise to be able to produce them. So no, we don't need to go outside to buy technology as such.
Okay. That's all, sir. Thank you.
Thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Vishnu, an individual investor. Please go ahead.
Yeah, hello, sir. Thanks for giving the opportunity. So first question is regarding the shipbuilding. I believe you are trying to even acquire a shipyard south of the Howrah River, or Howrah Bridge, way back in 2012. Yeah, I believe it was in Kulpi, right? What happened then? Why had it not occurred at that point in time? And are you looking to acquire?
Sorry, I'm not able to understand. Sorry, sir, I'm not able to understand the question. Can you just be a little clearer?
Can you hear me now? Is it better? Hello?
Yeah.
Hello?
Hello.
Mr. Vishnu, we can hear you. Can you please go ahead?
Acquire a shipyard in Kulpi way back in 2012. But
I'm sorry to interrupt you, but Mr. Vishnu, we cannot hear you. May I request you to please rejoin the queue?
Okay.
Thank you. The next question is from the line of Chakravarti R, an individual investor. Please go ahead.
Good afternoon, sir. Thanks for taking my question. My question is regarding the Italian operation, which is that from which quarter do you expect the Italian operations to start contributing to the consolidated bottom line? And kind of when I'm seeing the figures, it seems like Italian operations would be as big as the Indian operations. So can we assume that the total profitability of the company will almost double when the Italian operations go full speed? Thank you.
Thank you, sir. So as far as the Italian operations are concerned, we believe that FY23, we should be able to turn the corner. I would say that FY22, 23 first quarter is by when we expect to close all the legacy contracts. And the next 3 quarters, we should be able to concentrate and focus on the profitable contracts. In terms of the full year advantage, we should be able to have that from FY24 as far as the Italian operation is concerned. In terms of the size of operation, you are absolutely right. The size of operations of Italy are as big, or I would say as close to the Indian operations. Of course, the Indian operations are likely to grow further. In terms of the margin, the Italian business normally has a different dynamic of EBITDA expectation. So in Italy, we expect an EBITDA of between 6-7%. And that's how the Italian numbers are going to add up to the consolidated results.
Okay. If I may add another question, which is that right now you are saying you have about 500 million euros of orders in the Italian operations, which are excluding the legacy one. So this 500 million euros is for the next 2 years or something like that, if I may ask?
This would get executed. There are certain framework contracts which will get extended up to 4 or 5 years. So, different contracts have different execution time cycles. But if you look at the entire package, it would be another 4 to 5 years. And then, of course, there would be additional contracts that would keep on coming in as we go along.
Okay. Thank you. Thank you very much.
Thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. Anyone who wishes to ask a question may press star and 1 now. The next question is from the line of Nitin Gandhi from Cliff Street Capital. Please go ahead.
Sir, as far as Italian operation is concerned, can you just walk through how does it shape up in terms of execution from the time you receive? What's the first year stages and how much is execution happens, where the revenue comes in second or third year or like something like that?
Sure. So as far as the passenger train is concerned, it's a highly engineering oriented product. Whenever a contract is signed, first couple of years, maybe between, I would say 12 to 34 months is taken for the design and the design approval. But having said that, the revenue recognition does start as soon as the activity on the production side floor starts, which is concurrent to the designing activity. So, to give a very broad perspective, a normal train, the first complete train is normally supplied in 2 years from signing of the contract. And in between that D0 to 2 years, there is different stages of manufacturing that goes on.
So typically first year is low revenue, maybe as low as below 15-20%. And second year of post the contract is maximum revenue, right?
Yeah, and then as the train delivery schedule is, it's very, so if let's say it's a 50 train, then as you deliver the trains, then the revenues keep on getting better.
Right. Is there any retention or something which is held back?
It's on a contract to contract basis. There is not no one size that fits all, but there are certain contracts where there is a retention, there are certain that there is not. So there is a contract to contract basis.
For our order book, can we presume 5% retention?
I would not be able to give you a number like that right now because different contracts, as I said, have different clauses of payment. There are certain contracts which have an advance. There are certain contracts that do not have an advance. There are certain that have a stage payment. So to give a kind of a blanket answer that we have a 5% retention would be around, I would say it would be more speculative.
Maybe in next 1 or 2
But there are contracts that normally have, some of them they have retention, some of them they do not.
Maybe next Concall or Concall thereafter, if you can start sharing some average expected retention or some broad range, then it will be more helpful. Thank you very much.
We shall definitely evaluate this suggestion.
Thank you.
Thank you.
Thank you. The next question is from the line of Vishnu, an individual investor. Please go ahead.
Hello, sir. Can you hear me now? Is it better?
Yeah, it's better now.
Yeah. So, first of all, regarding shipbuilding, in the press release you have mentioned you had an order book of 18 ships. You are worth 50 crores. But if I check your releases, you have 5 diving support and 9 25-ton bollard full tugboats. So where's the additional 4 coming from?
Sorry, which? Hello?
Hello, sir. Can you hear me?
Yes.
Yeah, I didn't get your question.
No, there's a difference of 4. There's a difference of 4 ships or vessels in your order book for the shipbuilding. Because as per the information, I have an order from the Indian Navy for 5 diving support vessels and 9 tugboats, right?
I'm sorry.
So 9 plus 5 is 14.
Sir, but
Your comment is understood. I'm asking your question, sir. Your voice, your question is not clear to me. One is, of course, for the hearing problem, the line problem, but if you can specify your question, please.
Mr. Vishnu, please go ahead with the question. We cannot hear you. Mr. Vishnu, we cannot hear you, sir.
Okay, then. Sure. Apologies for the line. That's okay. I'll go back with you.
Thank you. Participants who wishes to ask a question, please press star and 1. Ladies and gentlemen, to ask a question, you may press star and 1. As there are no further questions from the participants, with that, I would now like to hand the conference over to the management for closing comments.
So thank you very much, everybody, for joining on this call. The questions were very insightful, and we've tried to answer the same to the best possible extent. If there are any further questions, our investor relations are always available to be reached, and we shall try to share whatever further information to the best possible extent. We believe that the coming period is going to be very interesting for the railway industry. The railway ministry has been setting very, very visionary targets for themselves, and that would culminate into a large-scale capex spend. The budget that has been announced by the union government is also towards a higher capex and infrastructure creation. And the company being in all fields of infrastructure, all the 3 business verticals being present in the infrastructure field, we believe that it should give us a substantial amount of tailwind. So thank you very much once again, and I hope to reconnect once we declare the Q4 results.
Thank you.
Thank you. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.